Here we need to calculate, okay, what is the principal, okay. So if you have a book, okay, there is addendum in the book, appendix ABC, appendix A. You can use a financial calculator if you want to, okay. Use your Excel to calculate. So the 12% for 2 years, the number is 0.7972. You need to find out the present value. That is on my book page, letter A-1 in the back of the book. You should go ahead to find out the appendix A like capital A like apple. So 12% for 2 years, the number is 0.7972. So you use this number, so in the back, can you find it? In the back of the book. Appendix, okay, appendix A, present value. Everybody see? Yeah. My page is A like apple, capital A-1. I want to
757.
I want to pause for a few seconds. I want to make sure everybody is in the same page. You want to check each other, everybody?
The table what? Say again.
My page is A like apple, A-1 page.
Okay.
So you find out it's called table A.1, present value of $1, you see? So you see 12%, you find out 12%,
Yes.
and period 2, you find out this number is 0.7972.
Yes.
Everybody see it? Okay. So you come back to this, at least my page is page 481 in the book. Page 481. So we know your company is going to pay total 200,000. You have 200,000 times 0.7972, and the amount is 159,440. So we know the present value of this 200,000 for today, if based on 12% fixed rate, 12% is very high, okay, by the way. It's almost like you deposit 159,440 in the bank, and the bank give you 12% annual rate, and 2 years after you can withdraw 200,000. Okay, right? So that means the value of the truck for today, if you pay cash today, is 159,440. So the principal, note the payable eventually is 159,440. So on the purchase day, you have your liability note payable on the credit side. Okay, on the right side, 159,440. And the value of the truck is also on the left side, same number. I want to pause for a few seconds. So far so good, right? Right? Then the balance is the interest. Okay, for each year, even though you did not pay for it, however, by the end of the first year, you need to calculate what is your interest. So 159,440 times 12%. And the number is 19133. This is called interest payable, and also the other side is interest expense. You can report this as expense, even though you have not paid for it yet. Okay? Because your company is an accrue method. So the first year you have a 19133, interest payable and also interest expense. However, you have not paid for it, right? So your principal increase for the second year. So the principal of the second year is original 159,440 plus this 19113. This is some people say it's a compound interest because you have not paid for it yet. So for the second year, your principal increase 159,144 plus 19,144. Then you time 12% again. So the interest for the second year it becomes 21,429. So interest expenses for the second year 21,429. And if you want to double check, you plus 159,144, the original principal, plus the first year 19,144 interest, plus 21,429 second year interest. The number very close to 200,000. So when you pay off 200,000 cash by the end of the second year, you pay off 159,144 principal, you pay off 19,144 first year interest, you pay off 21,429 second year interest, you pay off everything. So this is a complete bookkeeping. Any questions so far? I want to pause for a few seconds. It is on my book, okay, page 481 and page 482. Very interesting topic, because for the note payable usually mean more than 1 year period. And of course, in the real life, I just cannot imagine any supplier gonna give you the free shipment and free equipment for 2 years and just wait for you. It's so risky for them. But well, if your company is a Cisco or any other big company, Microsoft, so solid, no any financial problem, and the vendor just want to do business with you, and it may happen. It may happen. Any questions so far? So far so good, right? And the second scenario probably is more likely. Okay, the second example probably more likely.